Hey, everybody. Thanks so much for joining us today. My name is Anna Tharrington. I'm one of the managing partners at Hutchinson. We're a boutique business law firm, been in the Triangle for about 25 years, working primarily with technology and life sciences companies. And also an exciting area of our practice that we'll talk about today is our work with investor side clients. So to help out with that conversation, I'm going to introduce to you colleague John Osborne, one of the managing partners at Good Growth Capital, and let John tell you about himself and Good Growth.
Yeah, hi, thanks, Anna. Good Growth is a early stage venture capital firm with offices here in Charleston, South Carolina, and Boston. We started the firm in 2017, and now over 70 million in assets under management across our funds and over 35 portfolio companies and growing. So it's a lot of fun. We have a great team and really enjoying our work.
Awesome. Thanks, John. So Charleston and Boston, tell me what that's like geographically. Is the team split? How do you guys sort of navigate that as a fund?
Yeah, it really stems because two of our managing partners, Amy and Maureen, have worked together previously, actually, for almost 20 years in Boston. And so Maureen is in Boston and Amy moved down here to Charleston, and we recruited the rest of the team around the Charleston region. So it works really well, largely because Amy and Maureen have such a long-standing working relationship, but we also have an associate who, when we started, was in Hong Kong. Now she's in London. So we were set up from the beginning to work remotely, and it's worked really well.
Awesome. Thanks again for joining today. So what I'd love to talk to you a little bit about, I'll have your time for our listeners, is really sort of about the fund, about investing generally, touching maybe a little bit on how the past 18 months navigating COVID's been for you guys. But if it's our starting point, maybe we could talk a little bit about what types of companies Good Growth invests in and sort of where you sit in the fundraising cycle in terms of early stage or late stage.
Yeah, absolutely. So it's been told to us, we didn't coin this, but as we've been out there presenting it, that we almost have three specialized funds in one. We have a lot of health tech related deals and deal flow. We have a lot of green tech, and then we have a lot of data sciences. And some of that data science obviously overlaps the health tech and green tech kind of deals, but those are the types of sectors that we predominantly play in. But the firm was started, we're all operators. Every single managing partner has started a company. We've all made a payroll. We've all grown companies. So we're really operators at heart that now get to sit on the investor side of the cap table. But because of that, we play arguably a little earlier than a lot of funds out there. And we see a real opportunity in the capital markets to get into emerging deals a little earlier stage, as I like to call it, the art before the science is all baked out. And the supply demand of capital for that particular tranche seems to be a little more in our favor. So we like to find companies that have probably raised some friends and family angel money, but maybe aren't hitting all the milestones that the larger VCs out there are looking for, and really create that that next inflection point with our capital to then tee it up for those next round funders to come in and lead a good round.
Yeah, no, our experience working with you guys has been that you're sitting sort of in a unique spot, which has been fun to watch. And I know in some of our conversations, we've talked some about how Good Growth invests in terms of, we hear sort of safes or notes or seed equity. Is there a preference for you guys, or do you look towards your portfolio companies to help drive that conversation?
Yeah, I mean, I'd like to think that we're really thoughtful about what the right capitalization for the company is. And sometimes at that moment, it might be a safe or a note, and sometimes it might be a price round. I'd say, if anything, we err on preferring a priced, seed round, but that's not always feasible, or the company might be out there in the market with a safe or note already. But whenever we have a little say, I'd say we err on price rounds, as you know. And because of where we do invest, we've been able to begin a conversation with a company out there pushing a safe, and by the time we're actually ready to issue a term sheet, we've got them to a place of doing a price round. And I think, the cleaner we can keep the cap table, the better that we can position that company to be successful going forward. Our mindset is we're all going to win if we do it right and do it together.
It's really interesting from sort of the legal practitioner side, sometimes working on term sheets for investor side work, where the conversation does start as a safe or it starts as a convertible note. And as you sort of get through that process, you realize you've negotiated a lot of the things that you would need to do in a price round, right? So you've talked about things like valuation caps, which has sort of necessitated the ability to talk about what the company's worth today and putting a price tag on it. So you do see that sometimes, but I think it's fantastic that you guys have an open dialogue with what the company needs, which is then also, I think, to their benefit in terms of getting through some of these deals.
Yeah, for sure. And we've seen companies stack, safe on safe on safe, or note after note after note, sort of bridging to some, predicted milestone that never really got there, that then was hopeful that they were going to get a lead from a larger fund, and it just hasn't happened. So, in those circumstances, if we can come in and actually put a stake in the ground, sort of convert all those safes and notes that are lingering out there and clean it up a little bit, give enough capital for them to truly hit that next milestone, then we think we're doing both the company a real service and doing well for our LPs by going ahead and getting in at a good price.
Yeah, it makes total sense. So with thinking about you guys coming in a bit earlier, when you're starting this, because a lot of times later rounds will sort of look to the prior round and, what did they do and how's the team done to scale that infusion of cash? What types of things are you looking at when you start engaging with companies for diligence? Is it team, or is it strictly kind of technology opportunity stuff? What are those bucket items for you?
I mean, it's all the things that you would know and expect, and anyone out there listening would also expect. I mean, it's team, it's market opportunity, it's technology. I would share that with Good Growth, one of our competitive advantages that we think we're really well poised to execute on is we have a deep bench of people that understand sort of more technical sciences than many. A lot of our venture partners and advisors, if you look at our website, are PhDs from MIT. We have a real deep bench of qualified brains and experiences to look at more robust technologies than maybe others. And I'll share, personally, what was so exciting for me to join Good Growth was the ability to diligence things that I couldn't on my own. And, going back to a prior comment, that sort of art before the science, I think a lot of other firms will just bypass some of these companies because the technical diligence on it, especially at an early stage, just feels too robust an effort for what it might be worth. And we think there's real diamonds in those hills, if you will, that are just being overlooked, that we're well positioned to find.
All right, John. So when thinking about sort of early stage investing and, thinking about risk and opportunities, it seems to me there's a lot of potential upside out there for getting in early. And I'd imagine, sort of having seen this play out, there's also some risk there. And you guys, I know you've made a business decision. This is a good spot to be in. Can you talk a little bit about sort of risk versus reward, and what kind of thought as a fund you guys did about sort of where to come in and how to sort of try to get as much reward as possible?
Sure. I mean, we definitely are thoughtful about our portfolio construction. And as we talk to our investors and our LPs on the front end when fundraising about it, we're pretty clear about our objective there. But what that means in playing it out in our investments is, oftentimes we'll find companies that maybe they're going to exit in the 150, 200 million range if they do well, but we're coming in at a 5 million initial price point. And, for us to yield a good return, they don't have to be billion-dollar unicorns like so many of these larger funds that are deploying huge amounts of capital need to see. And So for us and our thesis and the way we approach these investments is, if we can get in at that kind of price point, then the companies don't have to be, unicorn exits for our return profile to look really, really good. So it's something we're really thoughtful about. Certainly, as you alluded to, it comes with its challenges. We've learned with over 35 portfolio companies, some of the inherent risks that come with certain investments, both in structure and in type of company. And I'd like to think that we learn from everyone, and I continue to learn from everyone. And so it does come with its challenges, but at the same time, we have companies like Skyhawk that have just exploded and can make the whole fund. So we don't necessarily expect that to happen, but when we do find one and it does hit, then it really makes for an awesome ride for the whole portfolio.
I can imagine it. No, the excitement of seeing some of those play out, it's got to make it worth it. Can you talk a little bit about sort of internally as a fund, how you guys sort of lead deals and sort of who works on what and how that works? I know we get a lot of questions from our company side clients, when they're engaging with investors and they talk to John. Is John their guy? Will John be on their board? How do you guys think about sort of who engages with which company and who sort of becomes a point person for that portfolio company?
Yeah, I so appreciate you asking this question. It is at the forefront and focal point of how we've built this firm. It's absolutely one of our core values. We set up the whole firm where if the fund does well, we all do well. So, unlike some firms, we are not individually compensated or motivated by, our deal. And if it's my deal that I get extra carry or anything like that, we're universally set up that way so that we leverage each other's skill sets and we do the absolute best work for our portfolio companies to yield the best return. And if we do that and we do right by our LPs that way, we're all going to win. And our skill sets amongst the managing partners are very different. I'm your deal term guy on the team, but Amy, leads our health tech diligence. Carolyn leads our data sciences. What they do, I can't do for our firm or for our companies. And vice versa, they're happy to push them, maybe in the deal term guy. So we work very collaboratively, leverage each other's strengths and skill sets. It's why we all felt the diversification amongst our team and our backgrounds was really important in building the firm. And we've seen that then play out. When we do take board seats, we're extremely thoughtful about who's the best person to fill that seat and help the company, not necessarily who's going to be the best babysitter. That's not how we view a board seat. We view a board seat very much as a extension of the team that should early stage like this, where there's too many things that can derail a company's growth at this kind of stage. And, infighting and disagreement amongst the team at this stage shouldn't be one of those hurdles. We should definitely have an alignment of vision. So sometimes that means one of us takes the seat. Sometimes it means we bring in a venture partner advisor on the team. And sometimes we agree that someone third party should do it and we should be an observer just to keep tabs on it. But, the right person in the seat means a lot. And for us, we're, hopefully it comes across. We're just constantly thinking about what's going to be the best thing for the company's growth. Because if the companies that we invest in grow well, we're gonna do well.
Awesome. Yeah, that makes sense. What we tell clients sometimes on the company side is when they're lucky enough to have competing term sheets, right? So there's a couple of investors they're talking to, and the deals have slightly different terms. We talk to them a little bit about, think about the check, but also think about what else the investors bring you to the table, right? So like the check plus mentality. And one of the things that I really enjoy working with you guys is that once that check hits, company's happy, but the work starts, right? Getting the check in, and then now it's time to go ahead and use this capital and grow this company. And I've enjoyed watching you guys sort of get involved and the check really being the beginning of what's to come.
Totally agree. I mean, I use the analogy, I'm a golfer, so, hopefully it resonates with many who are listening. I equate the getting the investment and the round done is now you've got your clubs and your caddy and you're on the tee box. Like now you just got the right tools to go play the game. You have not finished the race by any means, that to your point, that you just got started. Now you have the right equipment and the right tools to go play. But now it's go time.
I like that. You got a nasty slice, but I get your analogy. So now we're going to, if it's okay with you, sort of transfer into the past 18 months. And that's when we've gotten to know you guys pretty well. But can you talk to me a little bit? It's hard to have any conversation now without talking about COVID and sort of what it's meant. I know for some of our company side clients, for some of them, COVID has really accelerated growth. For some of them haven't been as lucky. But it's been really interesting working with our investor side clients because capital has been going out at a fast pace. Can you talk to us, I guess, generally about challenges of the past 18 months, maybe also if there's been any silver linings for good growth through this past 18 months, what that's been like?
Sure. Yeah, COVID is a thing. It still is. So for us, I'll put that in three categories, if you will, of our line of work. One is our fundraising and how, as we still have an open fund, we're continuing to fundraise and fundraising ourselves through COVID. You have our internal operations, just how we conduct business day to day. And then you have our portfolio, of course. For fundraising for us during COVID, on one hand, it arguably maybe was easier to get first meetings just because we doing a lot of Zooms like this and the travel hasn't been necessary. So coordinating 7 people scheduled to get a first call, probably has been a little easier. So our pipeline's very robust. Hard to say what it would have been like to actually close investments, just because we haven't, it hasn't been non-COVID the last 18 months. So hard to know what it would be different. But I think it may have hindered us or extended a little bit the closing meetings, but certainly growing the pipeline on the front end, I think it hasn't been an issue. You heard me say at the beginning, our setup, our internal operations weren't disrupted at all. We were set up to be remote anyway with our team. So we were ahead of the curve and, didn't had any disruption in our operations. But you ask any venture capitalist how they're doing, and the answer is really going to be about what their portfolio is doing and how their portfolio is performing. And for us, there were a lot of our companies where COVID actually, they were able to benefit from the operating environment that was created. And, for some that are in the medical space, they got fast tracked through FDA and got emergency use clearance, which accelerated their time to market by 1.5 years. The orders were through the roof for their product. So we saw several companies actually where COVID was a benefit in the new operating environment for them. Didn't see too many where it was very harmful. We had a couple that just physically couldn't get into their lab space for a little bit and maybe delayed them 6 months, but financially didn't really cause a problem. So by and large, I feel so fortunate. I think our whole portfolio is fairly fortunate in how we have navigated it. I do think it is a testament, though, to our thesis where we are thoughtful about investing in things that really matter to their end customer base. And so while we all have had to navigate COVID in every facet of our life, the core offerings of what our portfolio is teeing up for their, I'll stick with the golf analogies, teeing up for their customers is still valid and useful, and maybe it looks a little bit different, but not fundamentally changed. So, I'm happy to say that for us, it hasn't been too much of a disruption any more than anyone else has had to navigate the environment, but we fared pretty well.
I'm glad to hear it. That's obviously what we hope for sort of all clients and folks out there listening is that they continue to do well. As a law firm, that's something that we've continued to sort of talk about and struggle a little bit with is that we enjoy sort of seeing, meeting, being around our clients. I tend to think they're pretty cool and great people. But it's been a game changer in terms of hopping on Zooms like this. And I was telling folks earlier today that it's been interesting how many clients now we haven't physically met. Um, and it hasn't been a problem from a law firm perspective because we've continued to do the work and do the deals, and there's been a lot of them. But it is, part of me does say I'm kind of excited about, when it's safe to do so, being able to sort of see folks again. And some of our clients are asking the questions, will they be sort of digitally on Zoom for board meetings indefinitely? Like, is that going to be how it is even after this? Do you see changes sort of like that becoming the norm, or maybe going back somewhere in between where it used to be and where it is now?
Yeah, I mean, I have a hard time thinking it's going to be anything other than a hybrid going forward. That some of these practices are going to stick, um, but to your point, a lot of people recognizing where in person is really important, and so many people craving to get back to that. So I think it yeah, I think we're going to see a continued evolution of a hybrid and what that looks like. I know several of the companies that I'm on boards now are doing hybrids where, okay, if you're local, I'm on the board of a company in California where this on Thursday they're meeting in person, but I'm not going to make the trip. I'm just going to chime in via Zoom. And, that, I think that's going to be continued for a lot of people, a lot of companies, and a lot of firms, which isn't all bad.
Makes sense. So last sort of set of questions for me. Lots of the folks listening, I imagine, because sort of who Hutchinson works with, a lot of them find it super interesting when we get to talk to investors. And we have a lot of clients and probably other listeners who are thinking about sort of raising that first round. And I know there's sort of infinite list of sort of top tens and things to think about, but are you able to highlight just a couple of things, maybe if we profile of a company who hasn't raised a round outside of maybe friends and family, looking to talk to a seed level investor, a few things maybe they should be thinking about or sort of getting their house in order to make them more attractive in those conversations with potential investors?
Yeah, I think with the amount of volume now, I've had thousands of pitches, hundreds of diligences, you know, 50 transactions plus. The couple of things that stand out are, first and foremost, know what your investors invest in. And, for someone who is early on this journey, or this is new journey for them, I think they hear the term investor and they think that all money is the same money. And, they'll pitch their medical device to a real estate investor, and just there's a complete disconnect and a waste of time. So I think first and foremost is really understand the investor that's on the other side of the table and what they invest in, and make sure that you are offering something that they, are actively investing in. I think the next thing that I would encourage is to be really, really thoughtful about how you're going to deploy this capital and where it's going to get you. Um, Sometimes I think founders think too small. They're very, myopic in the current moment about what it is that their cash needs are today, and not thinking about it in terms of the real market opportunity that's right in front of them if only they had adequate resources to go attack. And we are continuously talking to folks when in that early conversation about, take what you think your budget should be right now off the table, and just what's the market opportunity right in front of you. If money was no object, what could you go attack, and build backwards what your round needs to look like from there. And I think the early stage companies that are really dialed in as to what their company growth needs to be and what capitalization is required in order to go hit those next milestones stand a little bit above the rest in terms of how we, as we're evaluating deal after deal after deal, those that feel dialed in right there tend to stand out a little bit.
Awesome. Great tips. I think they're also super universal, right? So appreciate you sharing those. All right. So fun question for you. What do your kids think you do for a
Oh my
living?
gosh.
What do they think your job is?
um, Gavin is old enough to think that I live real life Shark Tank, and the other two, they just know that I interrupt playtime by having to get on the computer. So
Yeah.
that's the extent of their known work knowledge.
I was on a show recently, and someone asked me the same question. My kids that are young, 8 and 6, and so what they told me was they think I just send emails and play on the computer. So it's always interesting to hear sort of what America's youth thinks we're doing behind these screens. So I definitely appreciate you joining today, and wanted just to give you a second. Maybe you could tell us, in terms of if folks want to learn more about you guys, in terms of potential LPs, if they're listening, is there anything that we could put out there that would be helpful to you or Good Growth?
Sure. I mean, obviously our website, goodgrowthbc.com, has info, but we're raising our third fund right now, $100 million target. And we're just doing really well. Our fund one is tracking over 60% IRR at this point. And we feel like we're really dialed in as to what we're doing and doing it well. And there's no shortage of deal flow in our sites and in our crosshairs that really fit what we're doing. So we're extremely excited about what the years ahead are going to look like for us.
Well, we really appreciate you coming on today, and are definitely excited to be on the ride with you guys, and enjoy working with you tremendously. So thanks again for spending some time with us, and look forward to hopefully seeing you soon.
Yeah, likewise. And while I have a minute, just shout out to you and your team. We have really enjoyed this relationship, and you're always responsive and thoughtful, and pointing things out. And can't thank you and the team over there enough for what all you've been doing, and look to continue that as well.
Appreciate it, John.